Ever wondered about the financial habits of the affluent and what they avoid in their investment journey? Well, you're in the right place. From shunning speculative ventures to emphasizing sustainability, we're unraveling the key strategies that guide the wealthy in their pursuit of long-term financial success. Stick around for valuable insights that might just reshape your own approach to investments. If you enjoy content that demystifies finance, consider liking, subscribing, and hitting that notification bell. Without further ado, let's explore the wealth of knowledge together. High-risk investments without due diligence. Affluent individuals tend to exercise caution when it comes to investments involving high risk, particularly those lacking thorough research and due diligence. Their priority lies in preserving and gradually expanding their wealth, leading them to avoid ventures that appear speculative or lack a solid foundation. Instead of chasing quick financial gains, the wealthy favor investments grounded in a comprehensive understanding of potential risks and rewards. This prudent approach reflects a commitment to sustainable wealth creation, prompting thorough research, expert advice seeking, and careful assessment of market conditions before committing to any investment. By adopting this methodical strategy, the wealthy aim to minimize the likelihood of significant financial setbacks and align their investment decisions with a long-term perspective focused on stability and enduring growth. Get-rich-quick schemes. Avoiding get-rich-quick schemes is a characteristic tendency among affluent individuals. Rather than being enticed by investment opportunities that promise quick and unrealistic returns, the wealthy prioritize more stable and proven strategies. They recognize that sustainable wealth accumulation is a gradual process requiring a solid foundation and, consequently, exhibit a level of skepticism towards ventures that lack a demonstrated track record. This cautious approach is indicative of their preference for investments that have undergone thorough scrutiny regarding risks and rewards. In contrast to those seeking rapid financial gains, the affluent focus on building and preserving wealth over time. Their investment choices align with long-term financial goals, emphasizing responsible and informed decision-making rather than succumbing to the allure of speculative ventures offering quick but often unsustainable returns. Consumer debt. Accumulating a high-interest consumer debt is generally avoided by the affluent. This financial cohort tends to manage their finances responsibly, keeping debt levels low and utilizing credit judiciously. Unlike individuals who may accrue significant consumer debt, the wealthy prioritize disciplined spending and careful consideration of the long-term implications of their financial decisions. By maintaining a strategic approach to debt management, they aim to avoid the financial burdens associated with high-interest loans. This cautious attitude towards consumer debt reflects their commitment to sound financial practices, emphasizing fiscal responsibility and the preservation of wealth over time. Impulse purchases. The wealthy typically exhibit a penchant for disciplined spending, which translates into their avoidance of impulsive purchases. Unlike individuals who may succumb to momentary desires, affluent individuals adhere to a budget and carefully evaluate the long-term value of their expenditures. This measured approach reflects a conscious effort to make informed and financially responsible choices, steering clear of unnecessary or frivolous expenses. By prioritizing thoughtful consideration over impulsive actions, the affluent aim to align their spending habits with their overarching financial goals, contributing to the overall stability and sustainability of their wealth. Fads and trends. The wealthy are often discerning when it comes to their investments, avoiding the allure of fads and trends. Instead of being swayed by momentary market popularity, affluent individuals opt for assets that possess enduring value and growth potential. This strategic investment approach underscores a commitment to long-term wealth preservation rather than chasing short-term fashionable opportunities. By steering clear of trendy but potentially volatile investments, the wealthy aim to build a robust and sustainable portfolio grounded in assets that stand the test of time and offer consistent, reliable returns. This mindset reflects a focus on enduring financial success rather than engaging in speculative ventures driven by fleeting market trends. Overconcentration in a single asset. Maintaining a well-diversified investment portfolio is a characteristic practice among the wealthy, contrasting with the inclination to overconcentrate in a single asset. Affluent individuals recognize the importance of spreading their investments across various asset classes to mitigate risk. Unlike those who might allocate a significant portion of their wealth to a singular investment, the wealthy prioritize a more balanced and diversified approach. This strategy aims to minimize the impact of any downturn in a particular sector, ensuring a more resilient portfolio that can weather market fluctuations. By avoiding overcommitment to a single asset, the affluent align their investment strategy with the goal of long-term stability and sustained growth, acknowledging the prudence of diversification in wealth management. Unnecessary fees. The wealthy typically demonstrate a keen awareness of fees and expenses associated with their investments. Instead of overlooking or accepting unnecessary fees, they are more likely to opt for low-cost investment vehicles. Affluent individuals may also negotiate fees when engaging with financial advisors, aiming to maximize the value of their investments. This astute approach reflects a commitment to optimizing returns by minimizing costs, acknowledging that fees can significantly impact overall investment performance. By scrutinizing and negotiating fees, the affluent ensure that their investment strategies align with the goal of maximizing returns and preserving wealth, reinforcing their emphasis on prudent financial management. Short-term thinking. Wealthy individuals often adopt a long-term perspective in their investment decisions, steering clear of short-term thinking and market timing. Unlike those who engage in frequent trading or attempt to capitalize on short-term market fluctuations, the affluent recognize the importance of patience and consistency in wealth building. This strategic approach involves a commitment to holding investments over extended periods, allowing them to potentially benefit from compound growth and weather market volatility. By avoiding the pitfalls of short-term thinking, the wealthy align their investment strategies with a broader financial outlook, emphasizing stability and sustainable wealth accumulation over immediate gains or losses. This deliberate and patient approach underscores their understanding that enduring financial success often requires a steadfast commitment to a long-term investment horizon. Avoiding speculative ventures. Affluent individuals tend to exercise caution when faced with speculative ventures that lack a solid foundation. Rather than being enticed by the promise of high-risk, high-reward opportunities, the wealthy prioritize investments grounded in thorough research and due diligence. This discerning approach reflects their commitment to preserving and growing their wealth steadily. By sidestepping speculative ventures, the affluent mitigate the risk of significant financial losses and adhere to a strategy focused on long-term stability and prudent risk management, emphasizing sustainable investments. The wealthy often prioritize investments with a focus on sustainability and long-term value. Instead of chasing after short-term gains or trendy opportunities, affluent individuals are more likely to seek out assets with enduring value and growth potential. This strategic investment approach aligns with their goal of not just preserving wealth, but also ensuring its continued growth over time. By placing emphasis on sustainability, the affluent aim to build a resilient and lasting portfolio that can weather market fluctuations and economic cycles, contributing to the overall longevity of their financial success. Thank you for joining us on this deep dive into the financial habits of the wealthy. We hope you found valuable insights that can shape your own financial journey. If you enjoyed this video, don't forget to give it a thumbs up, subscribe for more content, and hit that notification bell to stay in the loop. Feel free to share your thoughts or topics you'd like us to cover in the comments below. Until next time, happy investing and wealth building.